MELI is hitting all-time highs and is up 12% in after-hours trading after reporting its fourth quarter 2024 results. I covered MELI here on my channel after its Q3 results, as the stock was falling despite its fundamentals continuing to grow very well. I used this drop as an opportunity to buy shares of this business, and I am now sitting on some pretty decent gains. So in today's video, I want to go through the highlights from the fourth quarter report, share my thoughts, and explain what I am doing with my position now. So with that being said, let's hop into today's video. As always, I went through the earnings report and I took screenshots from all of the highlights that I found. So right here to start off, we can see that net revenues and financial income came in at $6.1 billion, up 37% year over year, and up 96% on an FX neutral basis. Income from operations was $820 million with a 13.5% margin. Net income was $639 million with a 10.5% margin. There was $58.9 billion worth of total payment volume, up 33% year over year, and up 46% on an FX neutral basis. MELI also had $14.5 billion worth of gross merchandise volume, which is up 8% year over year, or 56% on an FX neutral basis. So MELI is continuing to grow its revenue by over 30%, even with FX headwinds factored in. On an FX neutral basis, they would have grown revenue at 96% year over year, which is absolutely insane. In the letter to shareholders, it says, Mercado Libre had another great year in 2024, with more consumers and merchants choosing us, taking us past the milestone of 100 million annual unique buyers and 60 million Fintech monthly active users for the first time. Engagement among these users is rising. Retention and frequency on our marketplace are at record levels, as our payments and deposits per user in our digital account and the number of merchants borrowing from us is higher than ever. The strength of our value proposition makes these trends possible, and we continue to invest to always offer the best user experience for individuals and merchants across Latin America. So MELI passed 100 million unique active buyers on their platform, and they also passed 60 million Fintech monthly active users for the first time ever. So the business is continuing to attract more and more people, and as we're going to see, the rate of adoption is actually accelerating, which is fantastic. So let's continue on. This differentiated value proposition contributed to a record net promoter score in Brazil and Mexico. It is also enabling us to serve segments of marketplace buyers that have historically not been used on Mercado Pago. This is important as we pursue the unique opportunity to cross-sell Fintech services to our marketplace's 100 million unique buyers. Now, for those of you who may not be familiar with MELI's business, they have an e-commerce platform, and then they also have a Fintech platform where they give people loans. They also give businesses loans. They offer deposits like a bank. They allow people to invest, and they have credit card services. So what they do, it's kind of genius, but what they do is with their Fintech platform, they offer people credit cards, allow them to access digital payments and online payments, and then they get those people onto Mercado Libre, which is their e-commerce platform, and vice versa. So the more people that are on Mercado Libre on the e-commerce platform, the more they can funnel into their Fintech services. And then when they do that, more people can go and buy off the Mercado Libre e-commerce platform. This is how they have a flywheel. So every one of their business segments that's growing benefits the other business. And again, this is their flywheel and how they are growing so freaking quickly. They're basically giving people down in Latin America access to digital banking and digital payments. And then from doing that, they're also increasing their TAM for their e-commerce platform. So it's freaking awesome. I love it. And let's continue on now. So this next screenshot talks about commerce, where this says, we continue consolidating our position as the top destination to buy online in Latin America. And this led to gross merchandise volume surpassing 50 billion for the first time in 2024. The growth of unique buyers, which accelerated for the third quarter in succession in Q4 2024 to 24% year over year, is also a testament to this. We will continue to invest because although we are pleased to have reached 100 million unique buyers in 2024, we believe this number can be much higher in the long term. MELI also says market share gains in Brazil and Mexico, even against stiff competition and profitable growth. So the business is continuing to take market share in Brazil and Mexico while maintaining profitability and growing the business's profits while also investing in growth. This is pretty much exactly what you want to see as an investor. All right, now moving on to Fintech services. Monthly active users rose 34% year over year to 61.2 million, with even faster growth among heavy users. Assets under management grew 129% year over year to $10.6 billion. Mercado Pago was the most used credit card on the marketplace in Brazil for the first time on the eve of Black Friday. And this is kind of the flywheel that I was talking about earlier. Mercado Pago, which is the financial services, their credit card was the most used credit card on the e-commerce platform for Black Friday. And it sounds like this was the first time ever, well, at least in Brazil. So more people are using the Mercado Libre fintech services, and then they're using those fintech services to buy off of the e-commerce platform. So the flywheel is continuing to turn. In this next screenshot, MELI also says, this contributed to the total credit portfolio reaching $6.6 billion, up 74% year over year. And this is important because MELI is investing a significant amount of money into growing its loan portfolio and specifically its credit card portfolio. And the way that these investments work is MELI has to set aside provisions for this loan portfolio immediately and then realize the benefits and the profits from that portfolio over time. And they spent billions of dollars investing into this credit card portfolio in 2024. But the investments paid off and their loans paid off because the portfolio grew by 74% year over year. But I personally view this as a growth capital expenditure, and this is important when we start to analyze MELI's cash flows later on in the video. All right, but let's continue on through the shareholder letter, and this says, we set a new quarterly record of $820 million in income from operations in the fourth quarter. Growth was 23% year over year. So the business just had a record quarter in terms of income from operations, and it's growing strong. The increase in provisions as a percentage of revenue is due to the rapid growth of the credit business and the growing share of the credit card in the portfolio. There are two main drivers of higher provisions in the consolidated P&Ls as we grow rapidly. Number one, when credit grows at a faster pace than the rest of the business, provisions will rise as a percentage of sales because it is the only business that carries material provision costs. And two, we provision expected losses up front at origination, and we recognize revenue through the life of a loan, so provisions are accrued sooner than revenue. And this is typical for a lending business. They typically have to spend a lot of money up front to grow their loan portfolio, and then, as I said, they receive interest, revenue, and profits on that portfolio over time. I own another stock, which is GoEasy. It's a Canadian lender, and their cash flows, at least on the cash flow statement, are always extremely negative because they're always lending out so much money. But then when you take a look at it, they're lending out money to grow their loan portfolio and continue growing revenue and profits over time. So if you're not someone who is familiar with the aspects and the accounting of lending businesses, then it may look like MELI's profits are significantly lower than they actually are. And again, this is why I view the growth of the credit portfolio as a growth capital expenditure. And we're going to talk about that more. But then MELI says, in summary, the increase in provisions as a percentage of revenue is a natural consequence of the growth of a credit business and the shift in mix towards the credit card, which is kind of what I just tried to say here. This is a natural consequence of a lending business growing. So let's continue on. Net income reached $639 million in the fourth quarter, with significant growth of 67% year over year. For the year as a whole, we generated $1.3 billion of adjusted free cash flow after a strong end to the year, with $680 million in Q4 alone. We achieved this annual result after investing $860 million in capex, primarily to scale our logistics network, and nearly $3 billion in fintech funding, most of which supported the expansion of our credit book. So what MELI is saying here is that they generated $1.3 billion of adjusted free cash flow, while also investing $860 million in capex and $3 billion into the fintech portfolio. So without all of this growth capex, MELI could have probably produced somewhere around $5 billion in free cash flow in 2024. All right, now let's move on to the fourth quarter earnings presentation. And right here, we're taking a look at the unique active buyers. And we can see that in the fourth quarter of 2024, they were 67.3 million, up 24% year over year. And we can see that the year over year growth rates for unique active buyers are continuing to accelerate. And this is a very good thing to see for the business. Now, the next chart that I want to focus on is the items sold year over year growth rates. And on a consolidated basis, they grew at 27% versus 28% in the third quarter of 2024 and 29% in the fourth quarter of 2023. So there is some slight deceleration in the growth rates of items sold on MELI's platform. But personally, I do not think that this is anything concerning. It's just worth noting that their growth rates are decelerating a little bit. All right, now moving on to the next chart, this is the fintech monthly active users. And we can see that they are sitting at 61.2 million, up 34% year over year. And in the fourth quarter of 2023, the growth was 32%. So year over year, it does look like the growth rate did accelerate, but the growth rate has been decelerating over the past few quarters. But this is still very strong growth, and it is great to see. This next slide says, credit card is now our largest portfolio, and AUM continues to rise as consumers bring more funds to Mercado Pago. Assets under management hit $10.6 billion in the quarter and saw a massive growth quarter over quarter. It was $8 billion as of the third quarter 2024, and it increased by $2.5 billion in one single quarter, and it grew 129% year over year. This is ridiculous growth that they are seeing in their AUM. The credit portfolio is also continuing to grow very strong, and it's up 74% year over year. Now, you also have to think about this, because if their credit portfolio grew 74% year over year and grew by a net of, $2.8 billion, then it means that MELI lent out a net of $3 billion in cash over the past year to grow its loan portfolio. So that's one thing to consider when we are taking a look at these charts and the cash flow statement. And speaking of cash flows, let's go and take a look at the adjusted cash flows and what they subtract from this value. So at the top here, we have net cash provided by operating activities, which was $7.9 billion in 2024 versus $5.14 billion in 2023. If we quickly just do some math here, 7918 divided by 5140, this means that operating cash flow increased by 54% year over year, which is fantastic. So now let's take a look at some of the adjustments that MELI made to get their adjusted free cash flow. So the first one here is major, and it's increase in cash and cash equivalents and investments related to customer funds due to regulatory requirements. So since MELI is acting like a bank and a lender, it actually has to set aside cash as it grows its lending business due to regulatory requirements. This is just like with any bank in the United States or in Canada. They have a minimum amount of cash that they have to have set aside, just as kind of like a safety net. So as MELI's financials business continues to grow, they are going to have to continue setting aside more and more cash due to regulatory requirements. There's pretty much nothing the business can do about this, and this is just a consequence of the business growing. But moving on, the next line item is investments in property, plant, and equipment, which is capital expenditures, which came in at $860 million for the year. Now, the next line item is a major one, which is changes in loans receivable net. And this was a $4.7 billion expense for the year. And again, this, in my view, is a growth capital expenditure because it's the business growing its loan portfolio and needing to use cash from its balance sheet and cash from its operations to continue growing its loan book. So this number should continue to grow with MELI's overall business. And for example, we can see that last year, they spent a net of $2 billion to grow the loan portfolio. But now that the loan portfolio is continuing to grow at 74% year over year, they're putting more and more money into that portfolio. Now, the next line item here is proceeds from loans payable, which was $1.7 billion. Now, in my mind, what makes the most sense right here is to add these two numbers together to get a net of about $3 billion, because this $1.7 billion is MELI taking on loans to actually fuel future growth for their business. So this is not really, so in my opinion, this is not actually true cash flow, and I would subtract it. But I would also add back this $4.7 billion of growth capex for the loan portfolio. So this would be a net of about $3 billion added back to operating cash flow, which means that this would be a net of about $3 billion added back to the adjusted free cash flow, which would put MELI somewhere around $4.3 billion of true cash flow potential in 2024. Now, we also saw that the business was spending quite a bit of money growing its e-commerce business and its logistic network. So I don't think that the entire capital expenditures here of $860 million are all maintenance capex. I think that maybe half of it is. So we could add another $430 million back to the adjusted free cash flow to try and find maintenance capex. So in my opinion, I think that MELI's free cash flow potential is around $5 billion per year if they were not investing money into so much growth. And the reason that I'm explaining all of this is because when I'm valuing businesses, I want to know how much cash could the business produce for me if it wasn't investing in so much future growth. Like if the business wanted to stop growing today, how much cash could be extracted from it? And again, in my opinion, I think that number is somewhere around $5 billion for MELI today. Now, I also have some other screenshots here because I was using AI to help me understand these numbers better and help me come up with my $5 billion in free cash flow number. So here's what AI said about MELI's adjusted cash flow statement. This shows that Mercado Libre is investing heavily in its fintech ecosystem credit expansion, funding it partly through debt, while managing regulatory constraints on customer funds, all key drivers of its 2024 growth strategy. So even AI is pointing out that the business is investing heavily in its fintech business. Then I continued asking AI questions about this report and trying to find the actual free cash flow potential of MELI's business. And here at the bottom it says, the significant increase from 2023 to 2024, $2 billion to $4.7 billion, aligns with Mercado Libre's aggressive expansion of its credit offering. Example, credit card growth in Brazil, as noted on page 3, which is a strategic investment but reduces short-term cash availability, which basically means that this is a growth investment that is harming short-term cash flow potential. And this next screenshot is the AI's final estimate of MELI's true free cash flow potential. And here it says, given uncertainties, example, the exact maintenance capex, restricted cash scaling, a plausible range is 4.7 billion to 5.6 billion. This reflects MELI's strong underlying cash generation from its mature marketplace and fintech operations, unshackled from its aggressive 2024 growth strategy. And again, I gave AI the entire PDF and asked it to go through the PDF, and then I was asking the AI a lot of questions. And this is pretty much what it came up with, was around a $5 billion free cash flow figure as well. And based on all of my reasoning, I think that this is pretty fair as well. So now let's go over and take a look at MELI's business today. So it was trading for $105 billion at the close of the market, and it is up 12% in after hours trading now. So in after hours, it is trading for a market cap of about $117.6 billion. Now, in my opinion, I think that MELI can produce somewhere around $5 billion in free cash flow today, which means that the business is trading for about 23.5 times free cash flow potential. Now, a 23.5 multiple for a business that is consistently growing its revenue by 30% plus, I think is actually still quite cheap. So in my opinion, I do not think that MELI is even looking that expensive in after hours trading, despite the stock selling for all-time highs. I think that this business is kind of misunderstood, especially now that it is going more into becoming a lending business. But if you guys have watched my channel and if you're a Patreon member, you know that I'm not scared of lending businesses. I do understand them, and I do think that they are within my circle of competence. And you do have to adjust the numbers to try and find the true profit potential of the business. And when I do that with MELI, I think that it is a very profitable business. I don't think that it is selling for that high of a price today. And I also think that it's continuing to grow very well and will continue to grow very well in the future. So a 23 multiple for 30% growth, I think is very fair in the market. So I am not looking to sell my MELI position at all. I am very happy with my allocation to this business, and therefore I am also not looking to buy any more. If I did not have a position, I would seriously consider it because, again, I think the price is very fair today. But since I already have a position, that is why I am not buying more. And there's no way I am selling this stock. I think that it is a great business that I want to own for the extremely long term. I think that it has a great runway ahead of it, and I don't see the growth stopping anytime soon. So for all of those reasons, I'm going to hold on to my shares. And if you guys enjoyed this video, then please leave a like on it. And if you're new here and you want to see more stock market related content like this, then please consider subscribing to my channel. And if you want to get even more content from me, see my real portfolios and exactly what I hold, get all of my buys and sells in real time, and join my Discord community of over 1,200 investors now, then you can go and check out my Patreon. My Patreon members have been absolutely loving it, and I think that you will too. So go and check that out as well. But as always, thank you all so much for tuning in. I truly do appreciate it, and I really hope to see you all again in my next video.